Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. Hello, and welcome to another episode. Awesome. Hi, Isaac. Hi, Sketcher. Thank you, guys. Thank you for joining the session. So let's get started right away. So there's quite a number of things I want us to discuss this morning. First things first is what happened last week. And this is in regards to what happened with the job market report in the US, or what we call the non-farm payrolls. So it was the most anticipated data point for USD traders. So the first things that we saw is the average hourly earnings data, which came in at 0.4%, not very bad, but worse than expected. We were expecting 0.3%. Then there was the non-farm employment change, where the US created 187K jobs in the month of July. And once you compare this with the expectation of 205K, and the previous reading of 185K, it's basically indicating softening labor market conditions. And then the unemployment rate went down to 3.5% from a previous reading of 3.6%. So as a result of this, and I remember I've been mentioning this, Jerome Powell basically condemned the markets to follow every data point. So every time there's a new data point coming in, because they are following a data-dependent approach, you see the market reacting the same way. So on Friday, you can see how the dollar index was falling. And this is as a result of the NFP report. So when you compare what happened, you see that labor market conditions are softening. So if Jerome Powell and his team was to use this data point, then they would definitely consider holding interest rates at the current level. And that would be naturally negative for the dollar and, of course, positive for equities. So this explains what happened on Friday. And now, as we start a new week, we have one more data point to think about. And of course, the most important data point for the US will be the CPI this week. So now, going forward for the rest of the day, I think it's very important we focus on the outcome of the CPI, because it might define what might happen in the markets this week. So what are we expecting in the markets this week? There's quite a number of things. So let's check the calendar. So for today, we don't have much. Most of the data is medium or low impact. So yes, there's foreign currency reserves that just came out at 698 billion. Nothing much that could move the markets there. So we'll be having a couple of speeches from FOMC members. In this case, Haka as well as Bauman at 3:15 and 3:30 p.m. Then an MPC member from the UK, Peel, will be speaking at 7 p.m. So today it's basically a technical price action traders territory. Basically meaning that we'll be following the technical price action patterns rather than observing any news in the markets. So it's a similar day on Tuesday, NAB business confidence early 4:30 a.m. Then Chinese CPI on Wednesday early in the morning, before we look at US CPI on Thursday at 3:30 p.m. So this will be the most anticipated data point for the market this week. Here, we are expecting that the US annual inflation may rise from the previous reading of 3.0% to 3.3%. So if this happens and the market actually shows a CPI print of 3.3%, then in that case, we might consider the Fed going for another rate hike. However, if inflation keeps dropping below 3.0%, then in that case, we might have an expectation that the Fed will hold rates steady. Then we will be having gross domestic product data from the UK. This will be happening on Friday in the morning at 9 a.m. Core producer price index for the US, and of course, the preliminary University of Michigan consumer sentiment survey. So that's all we're expecting in the markets for today. For the week. And now that we know that we are in a price action traders territory, we might want to look at a couple of charts. if you look at the UK 100, there was a very nice break that happened here after the market was ranging for a while. So there was a very sharp drop, and now you can see the market is attempting to make a recovery. But this recovery is taking some form of shape that looks like a triangle. So if you are a FTSE 100 trader, then this is something you might want to observe, where the market is now seemingly forming some form of triangle, just swinging down and then up and then down, up, down, up. As for the pound USD, it's still trading within this channel where it's forming lower highs as well as lower lows. And now it seems like the current swing is towards the upper side. So the swing is so easy to observe. The market got to the lower trend line, bounced off successfully, continued with a push on Friday. And then today, being Monday, there was an early drop towards the lower side. But I trust that this swing will continue and the market will eventually get to the upper trend line. So in this case, if you follow the prints on the lower time frames, you'll notice something is developing here on the 15-minute chart, which basically defines a value area where the market may be bouncing as it heads towards the upper trend line. So for Euro USD, it seems to be like the opposite. In this case, we are seeing a market that was respecting this particular trend line very well, happened to bounce from the upper trend line strongly on Friday, and there's a good chance we could be seeing it going back downwards. So borrowing a reference from the dollar index, we are seeing quite a strong dollar this morning. But then if it happens to continue to weaken for the rest of the day, then it would mean something pretty bullish for the pound and something pretty bullish for the euro. So I also trust that if in case the dollar is weakening, the Euro USD could retest this trend line and perhaps even break and run towards the upper side. But then if that doesn't happen and the current trend continues, then in this case, the expectation is that the Euro USD continues dropping towards the previous low. And this is the last low that we saw on Thursday last week. So as for USD JPY, we know that the Bank of Japan has been buying bonds, and this has been weakening their currency. They have not made an intervention yet. So in this case, from the forward chart, it basically shows some resilience in the dollar against the Japanese yen. So since the open of the market this morning, we are seeing pretty slow but sure momentum. And I will expect that this market will continue going up. So my expectation is that the market keeps going up and perhaps even retests the last high that we saw on Thursday last week. So as for USD CAD, we had this particular pattern forming before last week. Then the market made a crucial break here, followed by a retest of the breaking point and then an acceleration upwards. And from the forward chart, this is how it's looking. But now, after making a break and a run for it, the most important thing we saw is the market basically closing the week at a major resistance level. So this is the resistance level. This is the area where the market was unable to break. So it attempted to break these on Friday, on Thursday last week, and now today. And you can see the number of candlesticks that are attempting to breach this area, and all of them are being unable to break that level. So it basically implies there's a very strong resistance around this area, and the market could pull back from this one. So if there's a pullback, of course, there's quite a number of levels. I'm expecting that the market could drop all the way back to 1.32997, or basically 1.33. But then if it breaks, then it could make another run upwards. So the dollar being pretty strong could rally up to another key level. So this is the area I'm looking at, around 1.34139. But then if this doesn't happen, then there's a very high likelihood that the dollar could weaken against the Canadian dollar and it could retest 1.33. Then as for gold, we know the usual story, a very strong support at 1930. We all know what happened here last week. We saw it retesting this area on Thursday. Then on Friday, a very sharp drop during the NFP, then a big jump upwards and continue trading higher for the towards the end of the day. And now it's pulling back again towards the same level. So if gold continues weakening for the rest of the day, then the area to observe quite closely is the 1930 price level. So I expect that gold will continue to weaken for the rest of the day. But then if it gets to the 1930 price level, perhaps there could be some sparks in the markets and we see a very strong rebound. So I don't know whether this will happen yet, but I'm only speculating that there's a good chance we could be seeing gold continue to weaken for the rest of the day. And then once it gets to 1930, perhaps we'll be seeing some spark happening in this market. So from the 4-hour time frame, this is how it looks like. So it's basically gold carving a channel where it keeps on going downwards. And now from the most recent swing, it didn't even get to the upper trend line. So it shows basically the overall bearishness in the market. And I expect this to continue for the day. Then for the Australian dollar against the US dollar, this is what we are seeing. A market that broke the lower trend line, kept going down after the Reserve Bank of Australia failed to hike interest rates. But then after the sharp drop, the market curved its way back, already got to the previous breaking point, retested that area, and now it's seemingly looking for another break downwards. So if you go to a smaller time frame, you'll notice that there is a trend line here. The market has been shaping up, and there is that potential that it could potentially break. So I would be very much observant of a potential break of this trend line, which would be a very strong signal, basically indicating that bears are entering this market. So as for the US equity indices, it's another sell-off. So we had a very strong bearish week last week. And towards the end of the week, you can see the sharp drop that happened. And that was right after the non-farm payrolls. So I expect that this will continue being the trend. So there was a big trend line break in the Nasdaq 100, followed by a retest on the 4-hour. So market breaks this area, goes back for a retest, and then pulls back downwards. So now this week, I expect more bearish momentum. So after the early morning rise in the Nasdaq, I expect that at some point, the market will keep going downwards. So perhaps the 15,403 area seems to be a resistance, and maybe we'll be seeing some further downside happening from this area. So very short and immediate target seems to be yesterday's low, or basically Friday's low. And of course, that day's low may also be very significant. So as for the US 30, you can see the double top formation. Double top is where the market is forming an M. So it goes up and then back down and then up and then back down, breaks below the neckline and then goes back up, forms a lower high, and then drops all the way down, forms a lower low. So this is a classic book pattern, and it's basically indicative of bearish momentum and a reversal of the previous trend, which was bullish. So in this case, I expect some further downside to be happening in the Dow Jones index. Same case for the S&P 500, which seemingly broke a very important trend line that was holding for quite a period of time. After breaking, it went for a retest and then dropped sharply. So now I expect another week where we could be seeing US equity indices continue to weaken, especially after the Fitch downgrade of US credit rating. Then for UK oil, or what you call Brent oil, there was a big and sharp drop happening on the markets last week. Then immediately the following day, the market made a recovery. Then on Friday, continued to push even higher. And now today, we are seeing another drop happening in the markets. So I don't expect that the drop will be sustained much longer, especially after the responses by the Saudi Arabia and Russia, where they decided to cut oil output in order to support oil prices. So in this case, after seeing such a strong recovery, I expect the market to retest the area. This is the previous high. So the market went back to retest the area, and now it's going down for a second time to retest the area again. And this is around $85.83 per barrel. So from this area, I expect the market to at least form some form of consolidation, and then continue with the original trend, which is basically bullish momentum. So French 40 index made a very strong bearish momentum last week after testing this particular resistance. You can see the area here, and then here, and then a very sharp drop. And now it's basically making some form of recovery. So I'm very bullish on European equity indices this week. So So we have already seen for the UK 100, it's already in this triangle, and perhaps it will break towards the upper side. So the French 40 index would also make some form of recovery. And also for the Euro 50 Euro Stocks cash index, there was a big sell-off last week. So if you go to the forward chart, it's how it looks like. After breaking towards the upper side, found some form of resistance, and then the market came crumbling back downwards. So whenever you have such a market maintaining all this pattern and unable to break this one level, and then immediately it breaks, makes a run for it, but doesn't stay longer on the upper side, it immediately goes back down inside the pattern, then it basically shows the weakness in the market since it was unable to sustain the momentum upwards. So in this case, there was a big sell-off last week, and now we are seeing some form of recovery. So yes, we could be seeing some recovery happening in European equity indices this week. So as for BTC, this is what we are seeing, a market that is just ranging. We are not seeing a lot of activity. Yes, we had some activity last week, big sharp drop downwards, followed by a recovery, shooting star, and then the market just got right back to the same pattern. So it seems there is a very important level being observed in this market. So all you have to do is to identify the level and keep looking for opportunities around this area. So every time the market drops below this area, there seems to be an immediate reaction where buyers come in and push the prices back upwards. So if price retests the same area again, then it might be important to look for a position in that area. So for the USD against the Chinese yuan, as you can see, it has been quite a bullish story, save for the recent pullback where the market attempted to go back downwards. So you can see the support area. This was the area where the market was unable to break 3 times. And of course, you can also see the resistance area. So I'll try and craft this for you. So from this area, you can see the way the market has been finding resistance time and time again. But then in this particular case, it seems like the market was able to break towards the upper side, pull back downwards, formed a higher low, and now it's attempting to push even higher. So I would expect the US dollar to continue gaining against the Chinese yuan, and at least for the short run, just retest the previous high, which is so close. I don't think it's a trading opportunity. Rather, it's an area to observe and see what happens to prices once they get back to this previous high. So the previous high is just on the horizon, just around this area here. So in this case, I expect that the market could be pointed at this area, and once it gets to this area, then we observe whether there's a continuation or some form of a pullback happening between the US dollar and the Chinese yuan. So with that in mind, I would check what questions that you guys may have and try to respond to them. Seeing a minister of notes and coins. You guys are using funny names these days. Hi, Meshach. Hi, Owen, and good morning. Hi, Matilda, Lemuel, Maurice, and Isaac. You can see Matt, Kazadi, Dorin. Thank you guys for joining the session. We had Canadian data too. Yes, it's also important to mention that, though the key focus for the market last week was the US basically jobs data. So I didn't pay much attention to the Canadian data, but all in all, we'll check that out too. So for Canadian jobs data, it was a big disappointment where we're expecting that the market created 24.6K jobs, but it basically lost jobs. So when the unemployment change was negative, and of course, the unemployment rate remained at 5.5% as expected, which is way higher than the previous reading, but also consistent with what the Bank of Canada was expecting. Would you rather have some Japan equities exposure or Chinese equities exposure in your portfolio, given that both countries are trying to boost demand? Personally, I wouldn't go for Japan, I would go for China. China seems to be really doing a lot in order to support their markets. A very interesting thing, just check out a company called BYD. It's not a recommendation to trade. Just put it on your watch list. It's a manufacturer of electric vehicles, and somehow they're able to produce an electric vehicle completely new at around $10,000. And if you look at the average prices in the US, they are about $55,000. So those Chinese EV companies could be taking the market soon. So it's something you might be interested in checking out. Another very nice comment from Apollo. Powell last year, before rate hikes, mentioned that there was a fraud in asset prices before the rally happened. Despite fiscal strategy by US government, don't you think the fraud is much more now? Yes, this is a very interesting question. For those who are new, when you talk about fraud, he's basically referring to what we identify as the dollar milkshake theory. So sometimes when the economy gets too much stimulus, we see there's fraud because asset prices tend to be overvalued. So there seems to be a very positive correlation between US government's expenditure or deficit spending and how the markets are performing. So the fact that the Biden administration has been spending too much money basically leads to more inflated asset prices. So right now, I believe there's even more fraud in the markets. And at some point, we'll be expecting some form of correction. So the very first sign that we had, that we saw of the correction in the market was a bearish week last week. So today, going forward into this week, will be a very nice test to indicate whether the market is going into a correction or not. So we observe what the S&P 500, the NASDAQ, and the Dow Jones will be performing this week. So if there's a second bearish week, then that might be the confirmation we are waiting for. Check on silver metal. With the ongoing tension between Russia and Ukraine, we see commodity prices like wheat and oil rising. Do you think this will sustainably lead to an increase in global inflation? Yes, I expect global inflation to be on the way back to the upper side, and this may happen majorly as a result of oil prices continuing to recover. So as long as we continue seeing oil prices recover, we know that they have an angle on everything. So in this case, if oil prices gain, then we could be seeing inflation resuming in the markets. So I'm checking on Brent oil. So this is Brent oil. This is the forward chart. This is what we are seeing. So in the beginning of June, we saw oil prices trading at a low of $71 per barrel. Today, we are looking at $85 per barrel. This is basically indicative of a strengthening oil market. It's the first time in a while that we are seeing this market basically showing higher highs. So with the market going for potentially higher high and facing a very strong support, you can see the number of times that this market was unable to break $72 per barrel, then it basically implies that inflation could be coming back. So we might continue seeing central banks continuing to tighten policy, and my bet is on the UK pound, where I expect that the interest rates could go up as high as 6%. Seeing more comments. Kindly explain the correlation between the Australian dollar and New Zealand dollar. They move on the same direction mostly. Yes, there are two neighboring countries. Their economies are highly dependent on agriculture and tourism. So the trends kind of follow each other. They also are very two countries which are very close to China. So when something happens to China, it also affects the economies, because the major trading partner with those two countries is China. So they tend to have a very strong correlation between their currencies. I'm new here. NFP Pesa, which is the best spread to use, lot size, and best minimum capital to start. So minimum capital basically depends on your capital bottom line. So just work with what you are very comfortable with. Don't go getting a loan in order to start trading. Just look for something that works for you. The best spread and lot size, I think the best referral I can give you is to, right after this, go to YouTube, search FX Pesa, then under channels, look for a novice to pro series. I've covered quite significantly the concept of risk management. And once you go through that particular episode, it will help you decide what lot size to use in your trades. Where is pound USD rallying while that of gold is falling? Yes, correlations are not permanent. I keep saying this. Sometimes markets will be correlated, but these correlations are not expected to hold indefinitely. So sometimes you'll see those divergences happening where two assets are normally moving in the same direction. At one point, you'll find one going up, the other one is going down, and that's completely okay. Which currency are you most bullish and which currency are most bearish? Currently, Japanese yen. I expect the currency to continue weakening. And of course, the pound, I just mentioned this. I expect interest rates in the UK to rise to up to 6%, and that should be pretty much bullish for the UK pound. So thank you very much, guys. Thank you for your time. Thank you for your participation, and I hope to see you on the next session. And that will be tomorrow at the same time, 11 a.m. So make sure to practice proper risk management, and of course, trade. Enjoy a good trading day. Thank you to Steve.